Okay, welcome to the Swing Trading with Cycles channel. This is where we time the markets without predicting the markets. We're going to do an update on uranium here, some specific names. So 9 specific names in addition to CCJ, and then we'll look at the two uranium ETFs, or the two popular ones, I should say. So we'll start with CCJ, and we'll look at the cycle perspective for CCJ. And really, most other uranium related stocks are following a similar cycle. Some are, taking divergent paths, and we'll talk about those. Where some are, more bearish or less bearish, etc. So today was day 11. So today is October 10th. So Monday night, we'll see tomorrow. Tuesday is always important. Do we get follow through, consolidation, or some kind of reversal? So we had a pretty bearish day, day 11, sort of sliced through. We had consolidated, this candle. This was a bearish outside candle, right? So we needed to get outside of this range, and we spent some time in there. We've kind of failed down the other side of it. And now this gap between 24.70 and 23.76. So just about $1 gap, right? So the 24.70 level would be the higher end of it, right? Will be important to see this price, how does price react to that level, or do we just kind of slice through, kind of fill that gap kind of immediately? So it would seem like we're early in the daily cycle, day 11, and we have a top on day 7. So an early top, which means a left translated daily cycle. And if we look at the weekly, that probably puts us about week 15. This is kind of a weird sort of squirrely cycle, but you could call it, your top on week 10. I mean, let's just make sure. Does that count right? Yeah, that's right. So that's week 10. And then this makes this week 15. And this is a swing high once we went below this low here, which also happened to be the 10-period moving average. They kind of coincided. But so below that 2640 area, you have a new low on the weekly chart, which is another swing high below, which is another sort of lower high. So CCJ not looking great, and this means the monthly chart has gone red. And you can see the monthly chart is a whisker away from making a new low. And if we were to do that, right, that would put us into kind of free air. Like, look at, this long wick, which was, a massive, reversal to the bullish side. It puts us in danger at retesting this level, maybe getting all the way back to that really important $20 area, which was our breakout point. That was a really important level on the way up. So it might not be surprising if it kind of comes down. Again, big picture, this is month 31 of the 3-year cycle, so 36 months. We have been in the declining phase of that cycle since month 25. This was a really close call where it looked like, oh, we're gonna make a new high, but we didn't, right? It's very clear. I mean, this line is here just as kind of a reminder. It's not even a double top. This is a lower high, right? I mean, you could call it a double top, but even more bearish double top. So this is month 31. It's still an inside month though, right? We need to break below around 24.68 to have a new low on the monthly and continue kind of that downtrend. But if we did, that $20 area becomes something of a magnet. So which is something to watch for. And so that's CCJ. Now let's move on to the other names. So the first is Paladin. And so similar action with CCJ, like on this daily chart, you can see we have a swing high here, and this is just the high below this one, which is below that one. So not looking great. And on the weekly, so this yellow line is your 200 week moving average. That's also important to keep in mind. You can see we have a swing high here. So similar situation to CCJ. So below 55 cents, that gave you your weekly swing high, which we're beneath now. And we've now made another swing high here. Or I should say we're setting up for another swing high if we break below last week's low, which was 45.80. And this is the OTC version. So you'll get sort of different prices if you look at the version that trades on the native index. But it's the same structure of the chart, and that's what you want to pay attention to. What was last week's low? If we break below that, that makes this another swing high. Just like this was a swing high when it broke below that. I hope you're following this, right? That's your weekly level. And your monthly. So this thing is threatening to go red, right? So this thing opened at 45.80. Again, just understand the principles. Whatever the price was that it opened at in the month, for the monthly candle, I should say, if we go below that price, the candle goes red, right? So that's something to be aware of. And that price kind of coincides with making that weekly low, right? Which makes sense. That's what multiple time frame analysis is. And that's important to know about, because if we do indeed go red, that's one of your big warnings that we're going to continue to move lower. Because you can see this candle here, if we zoom in, is actually a bearish outside candle, right? We made a new high above this month's candle, and then we came back and failed and made a new low. The catch is that we did have a little rally. You can tell. We know this because of this lower wick. That's why we opened as an inside month versus opening making a lower low, right? So so once this goes red, that just increases the odds that we're continuing the slope lower. And I mean, this upper wick is already telling you, not looking so great. And that's the monthly chart. And finally, and we'll start the other ones by looking at the yearly chart, actually. So the yearly chart, and this is actually probably a good place to start. Again, just to be clear, this chart is showing every candle is an entire year of price action. And so this red candle that you see here is the whole year of 2022. So it hasn't closed yet, so there's 3 months to go to close. But it's inside the range of this candle, which is 2021, the previous candle. Things would get really ugly if we made a low below that previous year's low. That would make this low, this high, a swing high, right? That's what would need to happen. And so that would be almost a 50% decline from here. And you can see that happened here, right? Once we went below that. Now, obviously, what followed was just down only, essentially. That also happened here, right? Where we made a low below the previous year's low. You have to observe this signal on the highest of time frames. That's a signal on the highest of time frames, right? That's a swing high, right? But it's on the annual chart, on the yearly chart. That's bad news bears. So that's Paladin. Now we'll move on over to ISO Energy. We'll stay on the yearly chart. We'll start there, inside year. So all of these are probably looking the same. So that's ISO Energy. This is Can Alaska Uranium. So Can Alaska Uranium actually made a new low for the year. So that's important to know about. That's more bearish. Also very clear that this is in a much deeper downtrend, right? Like this is a yearly chart again. So every candle here is a year. So it's been declining since 2007, just massively. So this is almost like a large bear flag. Base load energy doesn't have a ton of trading history, but it's just an inside year, basically, right? Red inside year, not a whole lot happening. Peninsula Energy, red inside year as well. In this case, wow, you have this big upper wick. This may be on account of the OTC nature, but the point here is it's not really doing much. Appia Rare Earths. So this made a new low just like Can Alaska, but notice again this like upper wick. Same thing with Can Alaska. Lower wick. That means, obviously we've rallied away from that low. We'll have to watch to see, and we'll zoom into these as well. We're just like scanning the yearly. So Govix. So this looks pretty bearish, right? Why do I say that? Well, notice that the other ones had lower wick, right? Which means it already moved away from the low, right? We had already started a rally. In this case, we're like kind of pressing the low, and we look like we are a whisper away from, again, making a yearly swing high. That's important. So you can see we did that this year. That was 2018. The following year, we also made a lower low, but then we just kind of consolidated. Then of course, 2020, COVID happened. that was kind of hard to say almost what would have happened without COVID, honestly. But this thing looks like it's headed for a new low. So of all these GoVX, just this first scan of the highest of time frames, not looking so hot. Not looking so hot at all. If you're looking for something to avoid in the uranium space. Lightbridge Energy, ooh, this thing is in a massive downtrend and massive dilution. You can see the high here was $4,000, and we're here at $4. So this thing is never going back to 4,000. This is an inside year, also pressing the lows a little bit closer, kind of like GoVX, but not quite as extreme. Then you have Mega Uranium, inside year, but actually, is that a new high? So 34.20. Yeah, actually did make a new high. Has not made a new low, has remained sort of just kind of consolidating a little bit. But again, this thing has actually kind of been consolidating for most of its trade. I mean, this is obviously a pretty precipitous decline, but this is just kind of a chop zone. And again, these are annual candles. So those are the individual names on the yearly. And then if you look at URNM, the Sprott Uranium Miners ETF, this thing has been up only since it launched in 2019. You know, you had this big bear, like this was 2020, your COVID year. You had follow through. And now we just have an inside year. So a lot of patience is warranted here. URA has been trading for longer. So we do have the vestige of that previous bear market. And you can see that down only situation, right? Once we made that low below so that was 2010, right? Or excuse me, I should say the low happened, or should say the big move down happened or started in 2011. But your signal was when we went below the low of 2010, right? So 2010 had a low of 97.74. And in 2011, we sliced below it. That was your signal to pull the ripcord. Why? Because that creates a swing high on the highest of levels. And in fact, this is actually a bearish outside candle because, yeah, it looks like we made a new high and then came down and failed. Even worse. Either way, breaking below this low, and there were obviously bearish signals on monthly charts and weekly charts and daily charts. So you had a lot of warning in real time. But when you zoom out to this high level, this really helps to give you that, like, okay, blinking red light, have to get out kind of thing. So that's helpful, right? And because of course, you know, if you count to like the next red, like this, like you then had 1, 2, 3, 4, 5 red years, and that red year bottomed at $11. So if you were able to get out at around 97, 96, even like call it 95, you could have saved yourself a lot of money and heartache over this kind of precipitous decline. It doesn't mean every time there's a swing high on the yearly chart you get a huge precipitous decline, but why take the risk, right? You have to respect risk. So those are the ETFs. Let's circle back to the names. So we looked at Paladin. Let's look at ISO Energy. I like this, that it looks like it's in more of an uptrend. If we look at the monthly, right, I mean, this has the nice look of a bull flag. You can see if we think about if we take a really quick cycles perspective, right, we had our top on month 20 and we're currently on month 30, you could call it, right? That's how you can kind of measure it just quickly, because basically this candle marks your high and that was month 20, and then we're now on month 30, and this whole thing becomes a big bull flag that will theoretically take us up to that next level. But this thing is clearly in an uptrend versus some of its other peers. Now, of course, this doesn't have the history of 2011, where it would have been, and 2012, 13, where it would have been down only probably like most of the others. But that's promising. And on the daily, it's different pattern from CCJ, because this has actually just been kind of red all the way through the last 3 or 4 days. But same kind of idea that you would expect a test of like that 236 area. We're up here at 250. So that's at least another 10% downside easily. And on the weekly, how are we looking? So notice we're just now getting that 200 week moving average. It just almost started to form because of obviously trading history. And so we're not too far above that. Like that just crossed around $1.50. Not to say we need to fall down to the 200-week moving average, but if we are declining into a 3-year cycle low, that is definitely on the table. So that's your ISO energy. Certainly it almost doesn't have the, and you can see there's this decline. Obviously, it wasn't all rosy. If we look at Can Alaska, so again, we looked at that's in a pretty deep downtrend on the yearly. That's important to know about. And if we look at the monthly, right, so this line here, the bluish, the teal line, is actually your 50-month moving average, or excuse me, your 50-period moving average. So in this case, it's 50-month, so a very long-term average. And you can see this thing crossed below it in 2007 and just kind of never looked back. It traded way below it in this period and then just kind of collapsed, right? And then we finally crossed above it in 2016. And that's why I'll say, when you think about moving average crossovers, like this thing became bullish like down here, right? Let's just zoom in to be really clear. This candle made a low, and then this candle made a new high and made this candle a swing low, right? That's what happened. And so if you were waiting for the cross of this moving average up here at the 50, you were waiting, and let's just even put the 10 period on there, right? That's your 10-month moving average. If you were waiting for that, you missed a lot of the rally, really, because you wanted to get in once we broke above the high of this candle, making it a swing low is the idea. So that's a good kind of illustration of how you use an actionable, like something like how you recognize the signal and then think about it in the context of a cycle, right? So like that was the end of this cycle, right? Maybe, from here to here, which is a pretty bearish cycle, right? And then once you, like this consolidation here is all good and well, but once you break below this low, in my opinion, that's a big signal to you. Now, really, you have to break below this one, because once you break below that low, that makes this a swing high, right? And that's what eventually happened, right? This did not, well, actually, yeah, right. Like you had these two candles of consolidation, and then this just kind of finished the job. And then you chopped for a little bit, you made this lower high, and then you just dribble lower, right? So now this certainly could be a bull flag. I mean, this candle here, the July candle, monthly candle, is definitely promising. It was a bullish outside candle, yeah. So a green bullish a bullish outside candle, right? And so we really need to hold above this cluster here at, call it 32 cents, which is actually hanging, sort of precipitously, ominously, right above the 50-period moving average. So that is interesting. And again, you can see these are lower highs. That's why when you draw that diagonal trend line, that's all that's really doing is kind of shorthanding that for you, because you couldn't draw a line that's sloping lower if you didn't have lower highs, and that's what we have here. Like, this is a downtrend. Now, the catch is you can have a downtrend and have it be the flag in a bull flag. So that's what we're going to have to watch for. Not all names are going to rise at the same rate as others, but what you would expect is a move to at least 121, right? To kind of test that cluster, right? If this thing does turn out to be a bullish one, like flag. Now, it could dribble down for another 6 months. Maybe we even grind our way down to here, and then we get our explosion up to 121. That could definitely play out. So that's Can Alaska base load. So we'll look at this on the monthly, not looking bullish at all, especially like in a sector like this, right? Like you saw what, like like this is just, yeah. So I say that because this is clearly heading for new lows, right? Now, anything could happen. It could reverse, but as of right now, you have an inside red month after another red month, right? Which is basically, this is a lower high off of this, off of this. Just not, and really, Your everything here hangs off of this rally, and these are your monthly candles here, because this doesn't have much trading action to even look at the annual candles as in as much detail. You have this 3 month rally, and then this move lower that almost wipes out that whole move, and so it's really a question of, in a way, in essence, is it going to wipe out this entire move, right? Which would take price below this low, or at least testing that area. So call it the 30 cents area. That seems pretty plausible. And that's your monthly. And if you look at it on the weekly, again, this is just kind of grindy action. Like, you have this rise, and then you basically give it all back. Then you have this rise, and now you're in the process of giving it all back, right? So you're thinking you're going to sweep these lows, and then are you going to get all the way down to here, which is where you have that monthly level. So not liking this one. Peninsula. So this is the OTC version, so not a ton of volume, I suppose. Let's see, is there a... So if we... Oh, okay, so the A6 version is not much better. But I guess the point is, we're really hanging precipitous... So this is important. We're basically just kind of grinding along the 200-week moving average, which is this yellow line here. That's not a good sign. And again, nothing mystical about the averages or anything, but like... And this is after a pretty deep downtrend. So let's look at the monthly. Right. So same kind of thing with that 50-period moving average. It's really just like a guide, like a visual aid almost. But man, this thing is in a very deep downtrend, which did reverse, right? We have this low and then these 3 months of consolidation, and then boom. So this is when you really kind of hit the jets. But this is the swing low that this all hangs off of from July 2020, right? You had 3 months of consolidation. Then this rocket ship up, this move lower. That was a swing low that held a higher low, right? Like held above this low. We get another move up. We get another higher low. Another move up. Another higher low. Now it's a question of, do we stay above that area, right? Like, you have pretty clear levels here, actually, right? Like, that is kind of your make or break, right? If we can stay above, call it 14 and a half, then we can avoid taking a trip to like 11 and a half, right? Cents, that is. So if you can, I'll zoom in here, right? So that's actually pretty clear in terms of, and this is Peninsula Energy Limited. If we go to Appia Rare Earths and Uranium. So this is your monthly chart. We'll just start here, and I'll say what catches my eye is a nice bullish green candle. Always love a nice bullish green candle. And this is your monthly chart. Now that's after this really long lower wick candle. That it did end red, so it wasn't able to go completely red to green. But this is looking promising so far. What you really would need is to break above this kind of cluster here, like we've been trapped 3 months below that level, which is serving as a lower high at this point. So call it 42 cents. And then that gives the price a chance to attack that level next. You know, that 60 cents area. So that's actually a lot, like, for the bullish case, right? A move above 42 then gives you almost 50% upside from there, right, to that level. Not to say we'll go there in a straight line, especially since, you know, this is a monthly chart. But that actually presents a pretty nice setup. And if you look at the weekly, we think about how this is playing out, right? So it's a bullish outside week so far. That's a very powerful signal. And that's after we got some consolidation at the higher end of the range. That's basically what the previous week was, after 2 pretty big green weeks, although this is really just an inside week of this after a pullback. I mean, all in all, this is just really a really ugly congestion zone. So it's just like it's the same as a monthly chart. Really, you're kind of looking at like really that's what you're doing when you're doing multiple time frame analysis. You're kind of looking at the monthly chart just like a zoomed in version, right? Like that decline on the monthly chart that we saw, like 2 bars. That's just these weeks here, right, where we slice through the 200 week moving average again, which is that yellow line, and now we're just kind of grinding on it. That's not great, but this does look promising, at least for the short term. We could see that all reverse by the end of the month. And also note that these stocks are going to be affected by the CPI number. Absolutely. I think it's impossible that they won't be. And again, just to drive the point home, this is your daily chart. And that bullish outside weekly candle is caused by the daily candle, which makes sense because it's Monday. So the daily candle actually is the weekly candle. It's, when they start trading Tuesday, they'll actually diverge. And we talked about GoviX not looking great that it wasn't looking great on the yearly, and this is why, right? So on the monthly, we are right on the cusp of making a new low, which would give us that low on the year. So it's all triangulated. Actually, yeah, it's all triangulated. That new low on the monthly chart would be a new low on the yearly. And this seems to be just almost like, you could call this a bearish rising wedge, right? Almost, right? This move in December 2020 just was not sustainable almost, it seems. We had this kind of shaky rise, higher low, this shaky rise, this ugly consolidation, and now we're kind of spilling over. So you really are going to want to see some kind of reaction at around 10 and a half cents, right? That's the low from this breakout candle, this breakout month, December 20, which basically this rally is getting tested, right? You kind of think about it that way, right? Once this pivot goes, let's see. So that pivot is around almost, call it just above 15 and a half, right? Cents this is. So you imagine, let's see specifically, what is that? Low of 20 cents. Oh, that's interesting. Yeah, so but this candle here, which is from the week of May 2nd, right? And so think about the structure of the chart. It looks like we have we kind of have a date with this level here to kind of test this December breakout, because this whole thing is just a massive decline, chop sideways to lower period that we tried to break out of here, and then we got this ugly mess. So it will be interesting to see how this plays out. And of course, that's off of this rally here in like 2017. Very interesting. And that's your monthly, and you can see on the weekly, these are all the patterns are lining up to be pretty similar. We've fallen below the 200 week moving average, and you can see, because this hasn't traded for as long, the 200 week moving average hasn't been around for as long. But if it were, we would have been below it for many, many years. And so that's the kind of thing that you want to watch out for. That's a very bearish signal. You can notice this massive decline got just to that there and then kind of bounced pretty violently. This could also become a false breakdown. Well, we can see, there's still time. If we look at Lightbridge Energy, so speaking of the 200 week moving average is your weekly chart, we're well below that and it's declining. That's always a really bad sign. And if you look at the monthly chart, yikes. This is just a massive decline. And again, there's huge dilution here. And that's your swing high, right? So this is essentially, I think one way to think about it is this is a bearish cycle because it's peaking pretty early in terms of time and hasn't really achieved much in terms of price, especially relative to peers, right? And it's in the context of this massive downtrend. So that's Lightbridge Energy. That's the monthly. And, that kind of tells you what you need to know. And finally, Mega Uranium. We will start on the monthly chart here. And, wow, this has been tough. Like, look at that. This huge move, and then it all gets wiped out. this huge move, and now it's all got wiped out. Now we're getting a huge move. Does it all get wiped out again? Maybe not this time. Maybe things are bullish, like the fundamentals structurally things make sense now. Who knows? What we do know is we had a pretty ugly red candle last month, and now we have this inside red candle, which looks like it looks like it's gonna make new lows, right? We can't know that until we see. We'll see signals on the lower time frames, but this is what it's setting up. So far, it's red. Things that are red are moving lower in price, and so until that changes, especially if we're red on the monthly chart, that's a pretty high. That's a pretty big signal. So we're red on the annual chart, red on the monthly. That means we're red on the quarterly chart because the quarter just started. This weekly candle is red as well, and this is probably the most important signal that you have. We're about to make a new low on the weekly chart. That's important. That's another way of saying this is going to become a swing high. This is already a swing high, right? We already have problems. This is already a swing high. So as you start to have swing highs pile up on top of each other, that you're just kind of digging yourself deeper into a hole is the way I think about it. So that is the lay of the land. I hope that was helpful. Obviously some of these are just I would be inclined to avoid. You're thinking about trying to maximize your returns in the bull market. Some things look maybe a little too there's no reason to take the risk when there are more bullish options. So that's my take on it. I mean, this is your URNM. This is a nice little bull flag, right? Like this is a nice potential bull flag. This is a precipitous decline, don't get me wrong. But now you have the support of this thing here, right? And I'll zoom in. And you just have to kind of pick your spots, right? So for URA, that 17 area is important, right? Like that. And if we dip below, you can buy the recovery, for instance. That's another way that you mitigate risk. You don't have to worry about kind of missing the boat. So that's my take. I hope that was helpful on 9 specific names. And of course, we talked about CCJ as we always do. And we went through those 2 popular uranium ETFs. Let me know if there are any other names that you think might be useful. Some of these I hadn't heard of. A lot of these were actually requests. So just let me know.